CNBC has learned that the state securities regulator in New Hampshire is investigating allegations of unauthorized trading on a huge scale by at least two former brokers at Merrill Lynch. It's a story CNBC has been investigating for months. As our Scott Cohn reports, the biggest alleged victim is none other than a former governor of that state.
I certainly didn't sign a document and say it's okay to steal from me.
And that's what you're alleging happened, that they flat out stole from you.
That's right.
Craig Benson is a man of many accomplishments.
I stand before you today ready to serve as your next governor.
Before becoming the 79th governor of New Hampshire, he co-founded a networking company in the early days of the internet. He has an MBA and he teaches business. One thing he is not, he says, is an expert on the market.
I know a balance sheet, I know an income statement, I know cash flow. I've never been a professional investor. I've always asked other people to do that for me.
Benson and business partner Robert Levine founded their company, Cabletron Systems, in Levine's garage in the 1980s.
I wanted a refrigerator and a freezer. Bob wanted a little bit more than that, and we thought we'd sell a few things and be done.
Cabletron went public in 1989 with Merrill Lynch as underwriter, and the business took off.
The computer networking systems maker was named Fortune magazine's 1990 #1 stock for return on investment.
By the time Benson stepped down in 1999, Cabletron had made its founders rich with millions to invest. So they turned to their former corporate accountant, Dermot Kavanaugh, who had gone to work for Morgan Stanley. And Kavanaugh introduced them to his partner at the firm, Charles Kenahan. For a few years, things seemed to go well. But just before Christmas in 2007, Benson says he got an urgent call from Kenahan. The brokers were switching firms.
We're moving to Merrill Lynch. I got to come up and see you right now, and you're going to sign all the paperwork so we can move your accounts.
He says there were stacks of paperwork, most of which he didn't read.
The pressure to do it was now. I trusted the guys to give me the paperwork, and I know I did not read them.
What Benson says he didn't understand was that Kenahan and Kavanaugh's compensation at Merrill Lynch would include millions of dollars in incentives if the brokers met commission targets. It's a common practice on Wall Street, and it's legal. But what Benson alleges happened next is not legal at all. For the next 10 years, he says Kenahan and Kavanaugh churned his account, trading and trading and trading without Benson's approval, not to make him money, but to generate commissions, big commissions.
Merrill Lynch made $26 million in fees to lose me $5 million. But if I had put that money in a passbook savings account, let's say, it would have been a $50 million gain.
That, Benson says, is based on a study of his accounts performed by a forensic analyst he hired. The study also says that if Benson had simply put the money into an S&P 500 index fund and left it to grow, he would have earned $100 million.
Are you trying to put the responsibility on them for things that should have been your responsibility?
Scott, if I wanted to day trade my own account, I would have done it myself. I didn't need to pay $26 million to Merrill Lynch to do it.
Benson's former business partner, Robert Levine, noticed the problems first.
He said, Charles is taking advantage of me. You better check your portfolio.
Levine filed this arbitration claim with FINRA, Wall Street's self-regulatory arm, alleging his account was relentlessly churned. All told, Levine alleged he lost more than $100 million. At first, Merrill fought back hard, saying Levine's claims had no basis. But after a hearing in front of a FINRA arbitration panel in 2018, the firm decided to settle with Levine without admitting wrongdoing for $40 million, the largest FINRA settlement between a firm and an individual customer in at least a decade. Now, Craig Benson has filed his own FINRA claim for $100 million.
If they can do it to me, who has a big account, and served as a governor of a state, who else can they do it to?
Merrill declined to comment on the state investigation, but said in a statement it disagrees with the arbitration claim. This is a case that doesn't add up. A sophisticated high net worth investor who claims to have been unaware of activity in their account for 11 years. Merrill did disclose that it fired Charles Kenahan last year. His partner, Dermot Kavanaugh, has retired from the firm. Through their attorneys, both men declined to comment. But Kenahan filed a public statement with FINRA following his firing, saying that the transactions in question were executed at the customer's direction. CNBC has learned that Merrill Lynch is still paying his legal fees.